I don't think there was any real expectations out there. You're trying to predict what these strong personalities are going to do, but I do think it reflects a huge change in the narrative here. I think going into it, it was pretty much an inevitability that trade wars are going to escalate, and now we're actually going the other direction. I think that it's pretty clear that China is very motivated to avoid that next step in escalation. I think that that's a huge shift, and I think that from here, it's not going to probably not going to get resolved over the next 90 days. But I think directionally, it's a huge sea shift for where sentiment's going to go on trade and a lot of these other concerns out there.
That being said, as a catalyst, we might have seen what it's going to do for the markets through the rest of the year, right? I mean, so it's really more a matter of how are people positioned? What do we think about in terms of how the first quarter is going to shape up for growth and all the rest of it?
Well, I think if you think about it, just over the last month or so, the key concerns for the market that have been driving the volatility have been trade wars, they've been oil, and they've been, the other issues that have been weighing on the market, and the Fed, and right. So we're basically resolving all those issues. Now, it's not off the table, but I think going forward, given that where the market's down today, it tells you that there's a lot more fear out there than there is optimism, which I think means there's a lot of runway from here for the market to go higher, even if you think this is going to drag on for 6 to 9 months.
So, all of that together, we don't know where it's going. What would you be doing? What would you be betting? Earlier this morning, Steve Grasso told us he'd be selling every one of these big jump ups, you say.
Yeah, I mean, listen, we don't trade on the day-to-day, so I think that's going to come in fits and starts. I think just for people that want to know what this is going to look like, I just look at the new NAFTA agreement, or USMCA, as a lot of people like to refer to it as. I think if you look at that, I mean, it was up until the 11th hour, you were getting jabs from both countries. People had no idea where it was going to go, and then we got a deal.
But again, once that was struck, it stopped being a market issue.
Sure.
Right? So now we have this thing, it's 90 days. Now it's about where are we in the cycle, what's earnings going to be next year?
Well, I don't think it's been struck. And first of all, and second of all, if you look at the other big concern out there is global growth, clearly. Just this morning, we got the wave of PMI numbers. I can't name a major region that actually went down in the latest round. So I think a lot of the concerns, now, there's no all clear signal here. But I think that at the same time, the fear out there in the market was everything was nonstop going the wrong direction. And now we're getting news on the Fed, we're getting news on oil, we're getting news on trade, and we're getting news on global growth. That's all positive. And I think that in our view, it really hasn't been about the fundamentals. It's been more about fear. And I think there's still a lot more fear than optimism built into markets, which is actually a bullish sign. I just look at overall investor optimism. People have written off the cycle. I mean, pretty much every major firm on Wall Street is calling for the peak in the markets. And I think that's really not how bull markets end. And I think that is, if anything, that's probably the biggest reason to be bullish here.
Now, you just said you're not giving us the all clear, and then you proceeded to give us the all clear. Why is it not the all clear? What's the downside
because
scenario?
On the Fed's going to react to the news, and one of the things that we view is that inflation probably, oil is going to weigh on the headline inflation number, but inflationary pressures we think are going to rise from here. So that's going to actually put more pressure on the Fed to rise over the course of this cycle. Secondly, on trade, I mean, again, we're really talking about these really strong personalities, and it's going to not feel very good until we get that deal, just like it was the case with the new NAFTA agreement. And on oil, there's a lot of geopolitical concerns there. I think a lot of, if you look at Europe and you look at Japan, while the PMIs this morning were pretty good, I think the underlying fundamental growth story there is not that good. And so I think it's going to be very choppy, but I think that the fear was that the recession's right around the corner, the profits recession's right around the corner, and we just didn't see any of that in the cards. So I think in the near term that, people have to price out the huge negativity in the markets, and then we can get back to a point where we can talk about, well, what's the next 6 to 12 months going to look like after that? I just don't think it's as dire as what the market was essentially pricing in, which was essentially an end to this bull market.